All right, there's a new piece of legislation making some serious waves on Capitol Hill. It has the potential to completely reshape America's financial landscape. It's called the Bitcoin for America Act, and it asks a really simple but totally revolutionary question.
I mean, seriously, just think about that for a second. We all know taxes are a certainty. But what if the very act of paying them could actually improve your own financial position? It sounds kind of like a fantasy, right? Well, this isn't just some hypothetical idea. There's a bill in Congress right now that's proposing a system that could make this a reality for millions of Americans who hold digital assets. So, let's dive into the specifics. This whole thing is officially known as the Bitcoin for America Act. It was introduced by Ohio Congressman Warren Davidson way back on November 20th, 2025, and it's a really bold move to bring Bitcoin directly into the federal tax system. Now, what's really interesting here is just how broad this bill is. We're not just talking about your regular income tax. It's proposing you could pay everything from corporate taxes to even estate and gift taxes directly with Bitcoin. This is a massive step, and it builds on earlier government directives to start exploring digital assets.
But here's where it gets truly groundbreaking. It's not just about making it easier to pay. The real game changer is how the bill handles capital gains. Okay, this slide breaks it down perfectly. Right now, if you bought Bitcoin at, say, $50,000 and needed to use it for taxes when it's worth $90,000, you'd first have to sell it. And bam, you get hit with a capital gains tax on that $40,000 profit. But under this new proposal, that entire taxable event just disappears. You just transfer the Bitcoin directly to the Treasury and your tax bill is settled. You get to keep the gains you would have otherwise paid taxes on. It's a huge deal. So, the next big question is, what does the government do with all this Bitcoin? Do they just sell it for dollars? Nope. And this is where the bill gets even more ambitious. It actually creates a whole new kind of national savings account. And this reserve wouldn't be starting from scratch. You see, the US government is already sitting on a massive pile, about 210,000 Bitcoins, from various seizures. As of late 2025, that's worth somewhere around $16 billion. All of that would be the starting deposit for this new reserve. So think of it like this: America's digital Fort Knox. Seriously, just like the US holds all that gold, this strategic Bitcoin reserve would be managed by the Treasury as a long-term national asset. And the goals are pretty huge: to hedge against inflation, to protect the nation's wealth, to help offset the national debt, and ultimately to strengthen the US dollar. The bill's sponsor, Warren Davidson, put it really simply. He said by accepting taxes in Bitcoin, the US government can start saving sats, which is a popular phrase in the crypto world for stacking up small bits of Bitcoin. The mission is pretty clear: build a national treasury of this digital asset, one tax payment at a time. Of course, a proposal this big has analysts and institutions like the Bitcoin Policy Institute buzzing. The potential economic impact isn't just big, the predictions are absolutely staggering. Okay, check out this number from a Bitcoin magazine analysis. If just 1%, that's it, just one, of all federal taxes were paid in Bitcoin, it would mean a $52 billion inflow into the strategic reserve every single year. That is a massive and consistent source of demand.
And what happens when you have that kind of steady demand? It stabilizes the price. Projections are suggesting this could actually reduce Bitcoin's infamous volatility by 20 to 25%. This could be the very thing that helps turn Bitcoin from a speculative asset into a globally recognized savings standard. So let's zoom out and look at the long-term vision here. If this trend holds, analysts are predicting the U.S. Reserve could be holding over 4.3 million Bitcoin by 2045. And at projected prices, that could be worth an incredible $14 trillion. That's trillion with a T. Now, before we all get too carried away, let's get real for a second. An idea this massive is guaranteed to face some major hurdles, both in terms of politics and just practicality, on its way to becoming law. First off, it needs bipartisan support, and that's a really high bar in a divided Congress. Then there's the technical challenge. The Treasury would have just 180 days to build an incredibly secure system to handle all this. The security risks are astronomical. I mean, what happens if a government wallet holding billions gets hacked? Then you have the market risk. What happens to the value of this national reserve if Bitcoin's price crashes? It adds a whole new layer of volatility to the country's balance sheet. And looking bigger, if the US does this, it could kick off a global race for other nations to build their own Bitcoin reserves, which would fundamentally change international finance. So let's kind of bring it all together. What are the stakes here, really? We're looking at what seems like a simple idea: paying taxes with a digital asset that has absolutely world-changing implications. At the end of the day, this bill is about so much more than just taxes. It's a clear strategic move for the United States to formally embrace digital assets, trying to lock in a competitive edge in what could be the next phase of the global economy. Which leaves us with one final massive question. Tying it all back to that idea of a digital Fort Knox, could this be the very legislation that solidifies Bitcoin's role in the 21st century as America's new digital gold? Well, only time and a vote in Congress is going to tell.